Welcome to Wednesday Web Chat. This is Carl Lewis from Vision 33, your host, and our special guest today is going to be John Reagan and Brent Peterson from Alavara, talking to us about 5 best ways to deal with an audit. John and Brent, welcome to Wednesday Web Chat, and thanks for being with us today.
Thanks, everybody, for taking the time to join us this morning. We're going to talk about how to avoid an audit by taking 5 steps towards what we call tax compliance done right. Well, the presenters today, actually, are myself and my teammate, Brent. And we're going to make this crazy story about what's happened in tax compliance over the past few years very interesting and try to help you out with your tax compliance process. Specifically, what we're going to talk about is the impact of new legislation and some economic factors that have changed the landscape around tax compliance over the past few years. And then we'll get into the 5 steps that will help you manage tax compliance in a better way and give you some tips to streamline your particular process. So let's talk about the new legislation and economic factors that have come into play. There was a Supreme Court ruling, maybe you might have heard about it back in 2018, South Dakota versus Wayfair. And the story behind that is that it changed the compliance world in a big way. It took what was already a burdensome manual process for most companies and made it exponentially more difficult. And this is how that happened. Prior to this ruling, Nexus, which is the obligation of a company to collect and remit sales tax to a state, Nexus was previous to the ruling based on a physical presence. By physical presence, I mean whether the company had products, people, or buildings in a particular state. Well, that was determined to be not quite fair in the age of the internet. And so the Supreme Court decided that we need to have some other determinant to be the primary trigger for Nexus. And so the physical presence got moved to a secondary determinant for Nexus. And the primary trigger for Nexus became this concept of economic nexus. It's based on how much business a company does in a state, how much revenue it does in a state. So then the next question that the Supreme Court had to answer was, okay, what is a fair determinant? Well, they left that, what is a fair threshold of revenue that would trigger nexus into a state? And they left that up to the states. So what we ended up with is a complicated map here that shows all the different thresholds that the states adopted. You got states here in dark orange, like California, Texas, that have a $500,000 threshold for economic nexus. That means if you sell over $500,000 in a year into those states, you trigger nexus. Other states have 250,000, other states have 100,000, and so on. So you have to keep track of all your revenue going into each state from all of your systems that generate business or work with business. So your e-com platform, your ERP platform, your point of sale system. So it becomes very complicated for an accounting department to handle. They didn't make it easy or easier on those accountants. And the hidden gotcha in here is, and this is for all those companies that sell tax exempt, is that the majority of those thresholds include exempt sales.
Yeah, this is a big one. I can jump in here, John, and kind of talk a little bit about this. So, most of the time, a lot of the sales, probably most of the B1 users have a lot of exempt sales. And so this is something that we really want to highlight, is the fact that economic nexus can be triggered even if you're selling exempt into these states. And another thing to keep in mind too, just as you saw on that last site, there's all those different threshold levels for each of the different states. Those are subject to change as well. So this is a moving target. I know recently some more states have been added to this exempt sales list. Initially, it was maybe only some of these states, and then over time, they've adopted some of these similar rules as other states to say, hey, even if you're selling into our state and you're not collecting tax, we need you to prove why you did not. So that's why it's really important to make sure that you have your exemption certificate managements for or exemption certificates for all of the partners that you're doing business with to prove why you didn't collect tax. And as you can see here, it's the majority of the states that are in fact including this number when they're looking at what is going to trigger economic nexus. So it's just one of those things that you need to be on the lookout for to make sure that you've got the necessary documentation to prove why you did what you did.
Great comments there, Brent. Thank you. Well, here's what happens when an auditor walks in the door and you've triggered nexus in a state, and it's because you have to, you're triggering it because you have both tax exempt and taxable sales. Typically, if you're managing those exemption certificates, they're on paper in a banker's box in a closet in the finance department, or maybe somewhere in the sales department, or they're on a shared drive as PDFs maybe. And the auditor knows that in a manual process like that, there's going to be human error. So the auditor knows that if they ask for a sampling of exemption certificates, the auditor is going to find missing certificates, certificates that are out of date. They're going to find forms in there that aren't even certificates. They may be business licenses or some other document that the person who put them away thought there were an exemption certificate, but they really aren't. Even if the address changed on the exemption certificate and that cert is not up to date, that's considered an invalid certificate. So there's a lot of things that the auditor can find here that will allow the auditor to come back and say, this isn't valid. Unless you can provide us a valid certificate, you're on the hook for the tax. So here's the big gotcha. In taking that sampling of exemption certificates, the auditor can come back with what we found with some sort of percentage of invalid, out of date, or incorrect certs. Let's say it's 1% to 2% of all the company's sales. The auditor can take that 1% to 2% and apply it going back 5 to 7 years. So just think about 1% to 2% of all the company's sales, that now the company is responsible for the sales tax on those sales. That can be quite a big bill. So this is actually where the auditor looks first whenever he or she is auditing a company that sells tax exempt.
The other thing that I would add here too is the simple fact that there's a lot of I guess meat on the bone for these auditors when you think about the exemption certificates, simply because if an auditor is looking at your tax rates, they may find some discrepancies there, but you may be only off of half of a percentage or something like that. Whereas if you don't have a certificate, you're talking about the difference from 0 to whatever that effective rate is. So what we've seen is a lot of these auditors do tend to target manufacturers and distributors simply because they know that's a kind of an easy picking. So it's just one of these things where we like to just inform people, make sure that they're aware of all the rules that have kind of changed and what they need to be looking out for, just to make sure that their business is secure and protected and doing the things that are going to keep them operating the way that they like to operate without the interference of, the government coming and trying to take some money that they feel is owed over the previous years or things like that. So, just it's a good thing to make sure that you're keeping a very safe and secure, tracking of your exemption certificates. So, and we've got a great little video here, John. I think you're going to play this. Kind of gives you the rundown of exemption certificate management, what that looks like.
Sounds good. This is a brief video, and here we go.
You always put taking care of your customers first. But before you can, you've got to take care of exemption certificates. They're the forms that prove a business is exempt from paying sales tax. If you don't collect sales tax from a customer, you may need to collect their exemption certificate. And as state laws on sales tax collection expand, the requirements for when you need to collect exemption certificates expands too, which means businesses may need to deal with more exemption certificates than ever before. And it's important to deal with them because states are auditing more aggressively than before too. The problem is manually requesting, collecting, validating, storing, accessing, and updating hundreds or thousands of new and expiring exemption certificates is time-consuming, expensive, and can slow down orders and business. But waiting to do it risks non-compliance and liability. Fortunately, Avalera can help. Avalara's exemption certificate management solution can automate the entire certificate management process from one secure cloud-based application. With Avalara, you can easily import all the certificates you already have, request new certificates either one at a time or all at once, and even collect certificates on your e-commerce site. When you do, your customers will receive a link to our online portal that helps them upload or create the right certificate for their unique business. Then the platform automatically validates to double-check each one before filing. Plus, set up alerts so that when certificates expire, you and your customers can be notified automatically. You can access all your certificates from a single dashboard, explore comprehensive reports, easily search, and customize your company's specific exemption rules to ensure you're always audit ready. So you can rest easy knowing your exemption certificates are taken care of and focus on taking care of your customers. Learn more at avalara.com.
Here's why the auditors are auditing more, why they're hiring in record numbers. It's because there's a lot of value in that sales tax revenue that they're trying to achieve or bring in. Almost half of the revenue that comes into a state comes from sales tax. So it's a major piece of the pie for the state and a major target for auditors. So as the video said, and as I just mentioned, audits are happening more frequently. They also are happening remotely. The auditor doesn't necessarily have to physically come knocking. They've learned to use the remote tools that we all have after coming out of the pandemic. There's just a lot. Also, states are coordinating their efforts in targeting taxpayers. So it's a situation where it's no longer if a company is going to get audited, it's more likely when. So what do we do about this? How do we handle this situation if you're trying to manage the compliance process? There are 5 steps, and the first step is to know where your business must collect and remit sales tax. This is knowing your nexus. And it's important to keep up to date on this. With all the changes coming out of that Supreme Court ruling, if you haven't done a nexus study or what we refer to as a sales tax risk assessment, then you really should take a look at it. We're offering a free sales tax risk assessment, and I'll get you that link here at the end of the slideshow. And just keep up to date on it. You may have a situation where you become obligated to a state that you didn't have nexus with before, and maybe you don't know about it. So it's a good thing to know because it leads to keeping the auditor at bay. There are several different things besides economic nexus and physical nexus that can cause you to become obligated to a state. If you have manufacturers reps in a state, if you're in multi-state or in multiple locations, if you have an investors board meeting in a state, if you go to a trade show and conduct business, there's a host of other triggers that can cause you to have nexus that you may not know about. So it's good to do an analysis every so often. And nexus is kind of this thing that companies aren't really sure about, but they're creating nexus and they don't know about it. In fact, almost all companies, 98%, are actively involved in one or more nexus creating activities that were shown on the previous slide. Again, a high percentage, 94% of companies have misconceptions about how nexus is created. And what's the cost of doing this process manually? On average, for the typical SMB, it's 39 hours per month, almost a week out of every month. So here's that free sales tax risk assessment that I mentioned. Here's the link. We'll share this slide presentation with all the attendees after we're done. So if you'd like to use that link and get up to date regarding where you're obligated to, this is a good way to do it. The second step is, once you know your nexus, once you know which states you're obligated to, then you need to register to be able to collect and remit sales tax to those new states. Now, you want to be strategic about this. If you have a good deal of exposure to a particular state, you might want to register your CPA or Avalera to represent you to that state in the registration process, because we can negotiate a reduction in the exposure in exchange for the registration and the state knowing about your company. If you go in and you don't have a strategic plan, the state can look back several years and find that exposure themselves. And then that's not a good situation to be in. So we can help with the registration. We can help with the voluntary disclosure agreement, with the exposure analysis, just like your CPA, if you're working with a CPA can, and we're happy to help a company deal with all those issues. Then you need to make sure that you're calculating the correct sales tax amount. Many tools that have been around out there base their tax calculations on zip codes. And why is that? Zip codes and tax rates really don't have anything in common. Zip codes were invented to help the mail get delivered a little faster. And then tax rates, well, why are they related? Because before the internet, that was the best way to try to find what the tax rate is. You look at the zip code. But there can be multiple tax rates in any one zip code. So what a company will typically do that's using a system based on zip codes is they'll find the highest tax rate within that zip code and use it. So they're actually overcharging tax. And that can be a bad situation if the customer finds out about it. And with that discrepancy, what's the company going to do about it? It's just not accurate. And auditors don't appreciate inaccuracy. The way to do it is to use a technology such as Avalera that can pinpoint the tax rate based on the rooftop location. And it uses lat-long technology to actually go down to the rooftop rather than to look at the zip code area. Step 4 would be to track and manage your exempt sales. Like we mentioned earlier, this is a hidden gotcha. You need to be careful about it if you're selling tax exempt. So it's a good idea to automate this process so that there isn't so that gotcha doesn't happen. And step 5, you need to be able to do the reporting and remit your sales tax to the proper tax authorities. There's over 12,000 tax jurisdictions in this country. How an accounting department keeps track of all of those jurisdictions with their board, with 20% of the jurisdiction borders changing at any one time, and 350,000 tax rates within those 12,000 jurisdictions. I don't know how they do it manually, but you need to be able to do it and do it effectively and accurately, and then be able to remit the sales tax to those jurisdictions. It's a good idea to automate that process to get beyond that inaccuracy. So here's the 5 steps in summary. Understanding what your nexus is, registering in those states that you've triggered nexus in, being able to calculate the tax rates accurately, being able to track exemption certificates and manage them, and then finally being able to remit the sales tax to the jurisdictions. So how do we streamline your tax compliance process? First of all, why would you do that? Well, trying to do tax compliance manually is a costly process. The typical SMB spends about $63,000 in salary for accountants to be able to keep the company compliant manually. Now, if you get up to the enterprise level, it's probably a team of accountants, and it's more like $400,000 in salary to pay these accountants to keep the company compliant. Couldn't that time be spent more effectively? Couldn't we assign that valuable accounting talent to projects that actually bring revenue to the company, that bring value to the company? Maybe assign an accountant or a team to look at putting a new product in a new market and returning a decision as to whether that makes sense from a financial standpoint. Or maybe assigning the team or the accountant to look at the accounts receivable process so there can be more cash on hand. Those are good uses of the valuable accountant's time, not necessarily keeping the company compliant manually. In a manual compliance process, the value is to the government. So those accountants are kind of serving as agents for the government in that work, if you can look at it that way. In fact, 75% of tax professionals believe that an auditor is likely to find a mistake if they embark on an audit. So we have a process that's very costly and has a high degree of error. So this is a process that's primed for automation. It's just a common sense thing to look at because of these factors. So here are these 5 steps again, aligned with the automation tools that we suggest to use in order to get the entire process automated. Brent, would you want to jump in here and describe this?
Sure. So as John was talking about, the first thing we've got to do is make sure that we understand where we're supposed to collect so that we can remit that sales tax. And as you saw earlier, I believe it's in the chat now, there is a free sales tax risk assessment that's simple to fill out, and it can give you a head start in trying to determine where do you have nexus. So I'd encourage each of you to take some time to do that. It's normally a $4,500 value, but with Vision 33 here, partnering with them, we are able to offer that for no charge. So that's the first step. And then we can also help with licensing and making sure that you're registered in the correct areas. We also offer what we refer to as a streamlined sales tax. So streamlined sales tax is it's a group of 25, 26 states that get together and they agree on what is a particular product, like an apple is an apple and a comb is a comb and whatever it may be. And because of that, you're able to get some free transactions for those particular states. So that's something you should ask about. We can help you with that. And then our flagship product is Avalora AvaTax. That's going to determine the correct tax rate based on what you're selling, where it's coming from, where it's going to, and all the other rules that make a determination on what the tax rate should be. And then next is the exemption certificate management piece, which we showed that little video about. And that's really going to help you to track and manage exempt sales in a very efficient way. You can request exemption certificates through the product. You can store them all in there, and you have them very, very easily accessible in the event that you do get an audit. And then finally, we can help with returns. So as John was showing earlier, there's 12,000 different jurisdictions. We know there's 50 states. Each of these states have different rules for how you return the money to them. Sometimes you've got to send it to the individual county. Sometimes it's just to the state. But that adds up. That's time consuming. And if you're using Avalora for returns, you can make one ACH payment to us, and we can make sure that all of those correct forms are sent out to the necessary jurisdictions, and all of those payments are made on time, and we can actually take advantage of any discounts that any states offer for early payment. So this is kind of the complete solution here to manage your tax compliance needs. So I just encourage you to take a look at that and have a conversation. And in some cases, you may have this totally figured out and you're good to go, but it'd be nice to have the peace of mind to know that you're doing it the way that it works for your business. I mean, the last thing that anyone wants to do is spend a lot of time going to all the different states or jurisdictions to look up tax rates manually, knowing that you still may get it wrong. One of the things that we did when I first began at Avalora was we did this exercise where we had to go through, and everybody in the class was given some particular situation we had to try to figure out. And hey, here's all the books. You can use the internet. You can do whatever you want to try and figure out what the correct tax rate is. And everybody in the class got it wrong. So, and this is a bunch of people that are from the world of tax compliance. So it's a challenging thing to do. And we're here to help, and we're here to answer questions and help educate.
Thanks, Brent. Appreciate that. So here's a video that we at Avalora are quite proud of. It's our first television commercial, which pretty much summarizes everything about Avalora.
Thanks to Avalora, we can calculate sales tax on almost anything, anywhere automatically. Avalora.
What if tax rates change? Filing sales tax returns. Managing exemption certificates. Business license guidance? Does it connect with accounting? Item classification? Cross-border sales? What about...
Do you have those budget markups? Thank you.
So there's Avalora. We had a lot of fun with that. You might have seen that commercial it's playing on PBS quite a bit, and with the PGA in golf tournaments as well. So from here, we will open it up to questions to see if anybody has any at this point.
Well, John, that explains why I have seen that commercial, because of watching professional golf.
Yeah. Avalera.
Very good. So, John, one question here. You guys kind of mentioned that you have these solutions. Probably, the flagship, that most Business One customers might be aware of, and that we have many customers running today, is Avatax. Can you give us an idea of, what's the experience like to add Avatax to your SAP Business One deployment?
Okay, good question. First of all, we work with Vision 33, and we've been partnered for, a decade, I believe. So our two teams work well together. The same company that you're used to getting white glove service from with your ERP would be involved in getting you set up with Avalara. The integration is actually fairly straightforward because it's already pre-built. We probably have pushing 500 customers now on the B1 platform. So it's not quite plug and play, because you need to set up all of your products and where you have Nexus and everything. But it's fairly straightforward because it's already pre-built. And we also have integrations or connectors into over, I believe it's 2,000 now, other ERPs and shopping carts and point of sale systems. So if it's any ERP, e-commerce, or point of sale system of note, we're probably already connected. We probably already have an integration built.
Wonderful. And I remembered, one of the things that, people don't, recognize, I think sometimes, is that, you're there to support them also if there is an audit that occurs.
Mm-hmm. True. If the company is using Avatax as we suggest, and it's set up as we suggest, and through that process, we guarantee that those rates are correct, and we will support a company in an audit.
Yeah, that's a lot of help for sure, because once those guys arrive at the door, they start asking for a lot of stuff.
That's true. Sometimes we have had folks come to us when it's a touch too late. They come to us and they're in an audit, and hey, can we get this set up? And yeah, we can help you moving forward, but it's better to get in front of it before they show up knocking. Make sure that you got that all handled.
Exactly. The most common call that we get from CFOs, controllers, accounting managers is, hey, we just got this letter from like California, New York, or Texas, and that they're looking at us, and we're not sure where we have Nexus and where we're obligated. We haven't done a Nexus analysis in a long time. So we might have exposure and we don't know about it. So can you help us? So we get that call all the time. And that's the purpose for this presentation, is try to avoid that and look at it up front.
Well, and for a lot of companies, since the pandemic, many of them started doing e-commerce business, some for the very first time. Some of them discovered that a lot of their business moved to e-commerce. And so their possibility of kind of crossing some of these thresholds in various states have increased pretty dynamically.
Yeah, very true.
I think it's a great idea to take a look at, just doing this study and kind of finding out, hey, what's our score today, right? And what that might, really help us think more strategically about the future. So,
yeah, definitely.
This has been really informational and fun to watch as well. So we thank you very, very much for joining us on Wednesday Web Chat. And if you are interested, you've got a couple of contact emails here you can see. Pretty easy, john.reagan and brent.peterson@avalera.com. You can always reach out to me, carl.lewis@vision33.com. We'll get you in touch with our people who know about Avalera, and they'll get you in touch with John and Brent also. So we'll be glad to answer any of your questions going forward.
Thank you very much for having us today.